Joining me right now is Hodges Capital Management founder Craig Hodges is here, along with joining the conversation all morning long this morning, Fox Business's Dagen McDowell and Fox News contributor Liz Peek. Great to see everybody this morning. Thank you so much for being here. Craig, kicking it off with you. We've got the CPI and the PPI reports coming out later this week. Your thoughts on where we are in terms of the inflationary pressures we've been feeling?
Yeah, it seems inflation is literally everywhere. I mean, it's just about every industry, everything a consumer does. It seems like there's more and more inflation that's creeping in, and food costs, gasoline costs. It's if you're building a home, it's so much more expensive than it's ever been. You've seen lumber prices, so inflation is everywhere. One of these days, the Fed's going to take notice of that, but this is an issue. And then you add in the fact that it's really, really difficult to hire people because of the government continuing to send checks and money to everyone to stay home and not go to work. These are real issues that companies, we do 2,600 channel checks with about 900 different companies, and we're hearing this throughout the economy, and it's a real issue.
Has this changed the way you invest, Craig, or allocate capital? I mean, this morning we're talking about yet another major spending bill. You've got the infrastructure bill, obviously, on deck, $1.25 trillion. That should be passed the Senate today. But then they open discussions for the, what Maya McGuinness calls a $5.5 trillion package. I know they're calling it $3.5 trillion, but this is going to include much higher taxes. Does any of this represent headwinds for the markets and the way you might invest?
You know, there are a lot of headwinds out there. The main thing is that the infrastructure, we've been talking about this, it seems like, for decades. And it's something that everybody wants, but for some reason, Washington can't get their act together. I mean, but I do think eventually this is going to happen. At Hodges Capital, we are heavily invested in cement companies, steel companies, companies that will benefit from infrastructure. And we think this is an area to be putting money. The market, continues to kind of move sideways here, but we think the reopening is going to bring, a lot of industries into the forefront that have kind of, almost been forgotten about, like infrastructure. And we think that's where investors should be looking to put money here.
Yeah, I mean, interesting to see you invest in things like cement companies. I mean, that is right there that will get impacted from all of this spending. Any other changes that you've made with, the economy trends, like U.S. job openings, for example, at a record high, the number of openings hitting nearly 10.1 million for the month of June. That's up 6%. You've got an economy doing well. The Federal Reserve probably right about on the doorstep to start getting into that taper conversation with the Jackson Hole meeting coming up. Any issues here in terms of staying as long and bullish as you have been going into this upcoming weeks, these next couple of weeks, with the idea of tax increases being spoken about and perhaps the Federal Reserve taking the stimulus away soon?
No, I don't believe so. I think the market's in a pretty good spot here. We're going to have probably 6-8 months of really, really good news. Now, the market's factored a lot of that in, and there's industries that are struggle, like the restaurant industry, because of having trouble hiring people, is going to struggle. That's an area that we've been selling. But the consumer, travel-related stocks, companies like Callaway Golf is booming right now. There's real opportunities in things like that. So you have to adjust your portfolio to things that will happen. And I think that's the reopening is going to bring a lot of money into those consumer type names as well.
And what about the earnings season, Craig? We're seeing a big move this morning on AMC. The stock is up about 10% or so, maybe off of the high. It's about 8.5% right now. We're talking about the quarterly numbers being better than expected, even though it's still a loss. They're reaching a deal with Warner Brothers on an exclusivity window. A lot going on with AMC. Where are you on the earnings highlights and how earnings has impacted how you allocate capital?
Earnings have been fantastic. About 90% of the companies are coming out and beating earnings, at least beating earnings, if not better. a company like AMC, it was going to go broke almost before COVID. I don't know. They've obviously been able to raise a lot of money here. I'd be very, very weary of a company that now that the theater business is on its heels is really in trouble. I don't know if there's too much of a future there. So, but earnings are great, and I think they're going to continue to be great for the foreseeable future. So, although the market's kind of priced a lot of that in, there is going to be some good news, and I think there'll be a lot of tailwinds for stocks over the next 6-8 months.
And I know you've been real bullish on small caps. You still heavily into small
Yes.
caps. Where are you in terms of seeing the most potential, the most opportunity right now, Craig?
Yeah, good point. We think small caps will do better than everything here. Versus GDP, historically, small caps have earned 3 times what their large cap counterparts will be able to earn. So the next and small caps have underperformed for, it seems like about half of a decade. So they're kind of due to outperform. And so positioning in small cap like we do at the Hodges Small Cap Fund, we believe is a very, very good kind of opportunity going forward.
All right. These are the job creators for sure. Craig, it's great to see you this morning. Thanks so much.
Thank you, Maria. Appreciate you.